Welcome to another S&P 500 analysis. Today is January 30th, 2021. Last week, the S&P 500 made a new high and ended up closing the week with a loss. Is this crack from the S&P 500 telling us this is the beginning of a major correction? In this video, we will analyze the price action of the S&P 500 and the other major market indexes, review the market participant sentiments and the market internals to see what they are telling us. We will also look at the US dollar, Bitcoin, silver, and the gold market. Stay tuned. Now, last Friday was the last trading day for the month of January, the first month of 2021. And you can see on this monthly candle, we saw a wick going up and kind of faded after an all-time high, and actually closed down for the month comparing to the December. It closed down almost 46 point or 1.22%. And also got a little bit of a tail here on this monthly candle, but it's still above this long-term megaphone channel. Now, there are people basically looking at a comparison to see would it be able to, setting up to do something like this back in last February. That's when we have that, pandemic sell-off, right? So right now, we're not going to make any claim or prediction that this was going to happen, but we're going to look at the sentiment and the market internal to see, what they are telling us, and we will be, based on our outlook on those indicators, what the market is telling us. So yeah, it could very well be that it might set up something like that to come back into this megaphone channel, and maybe it will pull back all the way back down here. Maybe and maybe not. Maybe it just come, bounce off and then push up to 4,000 or whatever, right? But we're gonna let the market tell us what it's gonna do. We're not gonna go and try to make prediction of based on what we saw in the past that it's gonna for certain that it will repeat, because there's nothing certain in the marketplace, right? The market will do whatever it will do. So this is the monthly look, and let's go and take a look at the weekly. So in this weekly chart, you can see for the week, the S&P 500 also lost 127 points, or a little bit over 3.3%. And you can see that it was a pretty wild week. It got a range of 170, almost 177 points, and also closed down below this 10-week moving average, but it's still above this trend, this megaphone channel, and also above this 40-week moving average. So definitely it is something we should pay attention to. We're going to see a little bit more pullback to come back down to somewhere around this 3,600 area, to test for this support here. So before we take a look at a little bit more detail on the S&P 500, let's go and take a look at the sentiment of the market participant and also the market internal and see what they are telling us. Now, first looking at the sentiment chart here, we see that the VIX actually came back up. We saw, came up and close at 33 above this 30 level. Remember, we're basically watching this zone here as a little bit of caution. And once it get above this 30 area, then we're basically looking at the market participant getting a little bit more fearful. And if we see it get above the 40, then we could see them getting a little bit more panic, right? More panicky. So right now it is, in a fearful zone, above this 30 area. So definitely the market participant are more fearful than before, and been sitting in this zone for quite a while, since that the October timeframe of last year. So right now we have to be mindful of that change in sentiment in terms of the fear in the marketplace. And also the other thing is we are looking at the put-call ratio. The put-call ratio, although it did not cross above the 0.75, but it certainly is coming up and closed at the 0.64 and above this, basically been hovering between that 0.45, 0.5 area for quite a while. So right now there's a little bit of risk off, right? And people start buying a little bit more protection. So you can see this, maybe a more put buying. That's why you see the put call ratio is coming up toward the 0.75. The market participant are getting a little bit more fearful and start taking some risk off the table and starting to establish some hedge and buying protections. And here we are looking at the up-down volume ratio, although, throughout the week, except on Friday, we saw up-down volume. The up volume was, more than the down volume for most part of the week, even when the S&P 500 was pulling back, from the Tuesday high, intraday high. But the ratio is positive, but mildly positive. You see on this day here, on Tuesday, it was only 1.02. So it's pretty much almost like neutral, 1-1, right? So it's not that strong, but it is positive. And then on Wednesday, we got that sell-off, that pullback near the end of the day, and we saw a 1.24, a positive up-down volume ratio. And similarly, on Thursday, we got that little bounce back. There's only 1.01, so it's no more like just a 1-to-1, right? So it is not much. So when we dig inside to see what the actual value is, the up-down volume ratio, although look positive on the chart, but the relative strength between the up and the down volume is not that much, right? It's pretty much neutral. And then on Friday, we got the sell-off, and that's where we saw the down volume overwhelm the up volume by a ratio of 2.5. So there were 2.5 times more down volume than up volume. And then also you look at this the advanced decline, the daily advanced decline. Even on Monday, right? On Monday, we saw the S&P 500 close up. Right? We saw a negative advanced decline. There were more than 578 more decliner than advancer. And then on Wednesday, we saw this balloon to 2,224 more decliners than advancer. Then on Thursday, we got that bounce back day. We saw a 1,232 more advancers than decliner. And once again, on Friday, that sell-off, we saw a decliner lead the advancer by 1,472. And here, looking at the new high, new low in the New York Stock Exchange, we saw only a modest 49 more new 52-week high than 52-week low, although it's still positive, which is a good sign. But the thing is, it is contracting, it is pulling back. And on the accumulative advanced decline line, the market is telling us to be very cautious. We are seeing a negative divergence off of a new closing high on the S&P 500. This negative divergence is a little bit different than previous negative divergence that we've been talking about in the recent past. Okay, I'm just going to leave it at that. Now, looking at the Nasdaq, right? The Nasdaq also shows a similar behavior in the similar characteristic in the up-down volume as the New York Stock Exchange. We are still seeing more positive, more up volume than down volume, although it's a little bit better ratio than the New York Stock Exchange. Right? It is a little bit more than just neutral. So, like for example, on Thursday we saw a 2.44, time more up volume than down volume. But if you look at the advanced decline, it is a modest measly 436 more advancer than decliners. But then on the down day, you see here on Tuesday, it was 937 more decliners than advancer. Wednesday, a whopping 2,727 more decliner than advancer. And then on Friday, we saw 1,602 more decliner than advancer. So once again, the Nasdaq market is also showing us, internally, the advanced decline is getting more negative. and the new high, new low in the Nasdaq market also reflect internal weakness. We're seeing that it contracted from way above here at this 600 level all the way down to 60 level. So here looking at this cumulative advanced decline line for the Nasdaq market, we see a similar characteristic, as the New York Stock Exchange. And again, we are seeing this negative divergence. The Nasdaq closed at a new high on the 26th, and we are seeing a negative divergence. Now, let's go and take a look at the indexes and see what the price action is telling us. Now, let's take a look at the S&P 500 in a little bit more detail here. This is the daily chart of the S&P 500. You can see that it's still within this big trend line. I mean, it's a big channel here, but it did break below this little bit of a small channel that we've been watching for the last few months. And right now it's booked below that. Remember last week we were talking about this potential 3720 support level, and that is this 127 extension, Fibonacci extension from this Fibonacci retracement swing level here. So, and then the other target that we're looking for on the upside was essentially this 3891 and also this particular extension here at 3901. So essentially we're looking for somewhere up at this trend line here on the price channel near the 3900 level. As you can see, it hang around this upper trend line and then finally pull back, and then it broke this supporting trend line here on this channel. So right now we're basically looking to see, will this pullback continue? Now let me zoom this in here. So zooming this in, we see that the price level here broke this 3720, and right now I'm looking to see would it be able to find support when it comes down to this pivot level near the 3646. So see would it get a bounce back and at least come up and retest this, backtest this support level if it continue to come down, and see would it come back up. Will try to take out the high, or it will get rejected and work itself back down to this lower trend line here on the channel and near the 3549, and extended also this pivot area. Okay, so that's the level that I'll be watching for the S&P. Now there is also another pivot high here that we've been watching as well, and that is this 3588. So here's the scenario that I'll be watching on the downside, is to see if it continue to come down, see would it be able to find support here at this 3646, come back up, back test 3720, and then get rejected and work itself down to the 3588. Then if it could find some support here, 3588 back test 3646, then pushes down to the 3550 area, or 3550 area near this lower channel here, the lower trend line of this channel. Okay, so that is the downside scenario on a little bit of an extended pullback. So looking at the upside scenario, right? We could still get a little pullback, but if we could get back above the 3720, and essentially we might see a little bit of a back test of this trend line channel here, this small little channel here that we're talking about, and back test 3720 hold, then we push up to the 3900. Okay, or it could also, the other scenario is just come up next week, come back test, get back above the channel, test, right, and then push. Okay, so those are the possibilities for the upside scenario and the downside scenario for the near term. Now looking at the Nasdaq 100, the Nasdaq 100 also broke a little bit of a support area here on this trend line. Right? After it made a high and closed at a new high on Tuesday, right? Close on a new high on Tuesday, and right now we're basically looking to see would it be able to get back above this trend line and move back up to the this 13,400 and possibly come back up to the high, right? So there's this little gap here that need to get filled, and also if it continue to come down, then we're basically looking for this thing to come down and test this 12,439 or 12,440 area. Right, there is also another gap here, and that's essentially this pivot high here. Okay, so watch for these possible price action scenario is for this thing maybe come up, back test this trend line here, break, get rejected, and then come back down to test this 12,440 area. Or if it could come back up, get back above this trend line, then get a little bit of a test of regaining support, and then push up, fill this gap, and see what it come back down and pushes through and to a new high. So this gap could also be a rejection and come back down to this trend line here. So those are a couple of the variation of an upside downside scenario. So let's keep an eye on that. But remember this 12,440. If it breaks, then we'd be looking at this 12,204. So that is for the Nasdaq 100. And here we are looking at the Dow Jones Industrial. The Dow Jones Industrial also broke support on this channel here. We basically was looking at this as a flag here, bull flag to make the projection, right? And was looking for the possibility of this thing coming up to this 32,000 area. As you can see, it has broke this support on Friday and also even on Wednesday, but on Thursday kind of snuck back above it. So we're essentially looking for this thing to possibly continue to move down to this 29,200 area and see would it be able to find some support. If it doesn't, then we're essentially looking for the next level move to the 28,957, 958 area. And essentially we're looking for this thing to come back down to near this 28,000. Right? Could be a little bit above that. You'll come back down to this channel here to see would it be able to find some support in this zone here, somewhere around this 28,000 area. That's for the downside. But if it come back up, regain control, back test the 30,650 area, then we'd be watching for another push to a new high and come up to this 32,000. And then the Dow Jones Transportation, you see Dow Jones Transportation came down and tested support here at the 12,096, right? And also completely filled this gap here. And that was one of the possibilities. We want to say we're looking for the support to see would it be able to hold this channel. If it doesn't, then it's going to break. Then we're basically looking at this level, 12,379 and the 12,096. So right now we want to see would it be able to get a bounce back up and maybe get a back test at 12,379 and see would that be able to would it be able to make it through. And if it doesn't, if it could make it through, then we're basically looking for this back test of the trend line up here and maybe possibly work itself way back up to this 13,000 area. Okay, but if it doesn't and it get rejected at 12,380, then we're basically looking for this thing to work itself down and complete the gap fill here near the 11,718. So there is a partial gap that still need to be filled, and also there is a gap down here, but we won't be talking about that until it get down to this level, and then we will take a look at the possibility of a move down to this level to fill the gap. But for now, we're basically looking for this retest of 12,380 to see would that be a resistance. Then we see a continued move back up to this trend line here. Otherwise, we'd be looking for a move down to possibly this 11,718. And here looking at the Russell also put in a new intraday high on Monday, but unable to close at a new high. right? So, and also it came back into this channel. Remember we talked about that. If it come down, we see would it be able to find support on this upper trend line of the channel, and then make a push toward the the 2200 and to the next level. Basically, it is the 200 extension somewhere around 2463. As you can see, that it did not make it above this high here, get above too much of the 161 extension, but it did tag this 2177. Okay, so right now we're essentially looking at this pullback. Let me adjust this Fibonacci retracement here to this high here. Okay, so right now we're basically looking for this thing to continue to pull back down to this this area here. Remember, we're looking at this 1935. Well, so yeah, 1935 wanted to pivot, and that is also in confluence with the 382 pullback at 1939.5. So we are looking for the Russell possibly make another test of this trend line, and then get a push back down, get rejected, and come back down to this 1935 and see would it be able to find support, and then get another bounce back up to the 2000. Then we kind of retest and eventually come down and test this lower channel trend line here. So it's basically this 50% area. We probably could see a 50% retracement. This right here, 1860, right? 1860, and if that doesn't hold, if it break below the price channel, then we basically are looking at this 1800 and the 1780 area here, down here at the 618. Okay, so right now, near term, see would it be able to come back up, and if it doesn't get rejected and get back above the channel, then we are looking for another test of this 2200, right? But if it is unable to get back above, break above the channel and continue to move down, then we basically, right, we basically are looking at the retest of this pivot here, somewhere around 2000. And if it failed that test at the 2000, we're looking at this 1935 and see would it be able to find support at this 1935 area. And if it can't find support at this 1935, then we're looking for a push to at least get down to this 50% area, and essentially probably by that time it will be close to having a confluence with this lower trend line on the this price channel. And if it doesn't get a support here, then we will be watching this 1800 and the 1781, this 618 Fibonacci retracement. And if it break that, then we'd be looking at lower level, and we'll talk about that when the time comes. But for now, that's what I'm looking at for the Russell 2000. So there you have it. We basically look at the market internal and also the sentiment. And certainly there is a crack in the market here. We have to pay attention to the message that the market is sending us to be very cautious. Right now, a lot of the indexes have broke near-term support. So we need to watch that. Will they be able to reclaim that support that just recently gave up? And if they cannot reclaim the support, then we have to prepare for a little bit more pullback and be a little bit more cautious. In this segment, we're going to take a look at the US dollar and the metals market, and also Bitcoin. So let's start off with the US dollar here. And we see right now on this weekly chart, it's still under this 92.15. So let me zoom this in. And you can see that right now it's still under this 92 area here. Okay, try to make itself up. But I'm still expecting the dollar to come down and possibly get down to test this 87.42 area. So I'm watching that. And if it come up, I'm still looking at this as a potential resistance and get rejected back down. So as far as this chart is telling me, that we probably still be looking at a weak US dollar. And if we zoom this in on a daily chart here, so you can see it try to make a little bit of a rally here to get up. And right now, we're basically looking at a little bit of a resistance here around this 91 area. So we'll see if it could break above that 91, then be looking at this 92. Otherwise, be looking at this coming down to retest this 89. Then I'd be looking at to work down toward that 87 mark. Now let's look at Bitcoin on this weekly, starting off with this weekly chart. You can see Bitcoin is getting straight up parabolic all the way up to close to this 42,000. The high was 41,986, right? And it came back down and retraced all the way to the recent low of 28,732. So right now it's sitting at 34,300. And let's go and zoom in on the daily chart here and see what is it doing. You can see that I also have a trend line down here, and it is trying to break back above that trend line. Remember, I did tweet it out to look for that 3,500. I mean that 35,000. If we could get above that 35,000, this area here, then basically was looking for it to try to make its way back up toward the 40,000 area. And you can see it's kind of got found some resistance and faded up here, and that's up here near the high of 38,664. So right now it's got back underneath this trend line here, and we'll see would it be able to make another break and come up to this resistance at this 36,565. And if we can't get up to this level, break back above this trend line, I'm looking at this thing to come back down and retest this 30,000 area and see what it hold and make it back up, and eventually try to get back above this pullback. Then we'll see would it make another move toward the high here. But if it continue to come down and unable to get back above the 30,000 level, if it get back below it, then definitely this 28,000 would be in play, and that's going to be a key level of resistance key level of support that I will be watching. Now let's take a look at silver. Now before I start on silver, I know there are a lot of people paying attention to that Wall Street bet in Reddit talking about short squeezing silver. My suggestion is don't pay attention to those talk and trade based on the technical, what the price action is telling you. And if you could trade off the technical and you could find a trade, then trade according to your plan. And if those Wall Street bets guy come in and happen to put on a short squeeze and you're in a position to benefit on that, then that's great. But if it's not and it doesn't occur, then at least you have the technical, your trading plan, your price action, whatever you are trading off, and you're trading off of those levels, and you could manage your risk and manage the trade that way. But if you are trying to get into a trade based on those rumors or in plan or whatever you might call it from these Wall Street bet people, trying to push the price up of silver or whatever, then you basically just making a gambling bet. All right, so I would not do that myself. And right now I'm looking at silver. I do see some positive on the silver here. And if you look at the weekly chart, it came down to this 22,725 and got a nice bounce off of here recently. It even got up to the 29.5, 29.50 area, and then pull back and then test this 22.72 area a few times before it make another move. So right now, essentially, I'm looking for silver to see could it make another run up to this 29.50. So let's zoom this in on the daily chart and take a closer look at the price action here on the daily. And let me zoom this in. So you can see that, see how the price action here, bounce off from this support here at 22.72. What I'm looking at is this particular zone, okay? This particular price zone, and there's another zone here that I'm also looking at, right? But this is the bigger price zone, and what I'm looking at is for this thing to come up to this 29.50. And you see recently it balanced here and tried to break above it, came back down. And you could also notice that it is making a higher low on this move here. So I'm looking for this thing to come up and break this level here, somewhere around the 28, the 28.10. So if we could get above that, then I'd be looking at this 29.50 area here on the silver. Now, for those that are trading the ETF, the SLV, so let's go and take a look at that. So you can see on the weekly, it came down to this, near the 20 level and 20.50 and bounced up to this 27 before it pulled back, and then, found support at this 20.50 level a couple times, and now it's making its way up. And let's zoom in on the daily and take a closer look at the price action. So you can see that it came up here near the 26 pullback, and again, just like the silver future, and it's making a higher low, and I'm looking for this thing to break above this 26. If it could break above this 26, then I'm looking for this high to get retested, and which is above 27 here, and that would be 27.39. So those are the near-term target that I'm looking at, and certainly I think silver have a little bit of upside potential here, because we're looking at this again, big balance area here, right? So if it break above this this level here, then it could run a little higher. Got to go back to the weekly. So here, if it could get above that 27.26, could be looking at somewhere above 30, right? Or at least get up to this level here, somewhere around the 28.29 level. Okay, so that is silver. Now let's go and, that's the silver ETF. Now let's go back and take a look at gold. Here is gold on a weekly chart. Remember I said gold is already in a bull market, and it is in a pullback mode. So a lot of people are still thinking about this is the beginning of a new bull market. I said, no, that is not the case. If you are looking at this chart here, and even if we zoom out, and you can see that gold, came up right here at the 2011, and then pulled back. And right now it's making, just recently made a new high here, right at 2089.20. Then it pulled back. And remember, I was saying that I'm looking for these breakout level that need to get retested, and it came down to this 1804. So right now it's basically trying to consolidate here and see would it be able to get back up above this 1923.70. So let's go back to the daily chart and take a look at the price action a little bit closer here. And let me zoom this in. All right, so you can see that right now gold been pretty much in a consolidation mode here, right, for the last few months. So right now I'm looking to see will gold be able to get back up above this 1923.70 area, and if it cannot get above this area, then I'm looking for this thing to come back down to this 1804 and see is it going to break. If it's going to break, then I'm basically looking at this area down here, somewhere around the 1,700 area for gold. So that's basically the look for the metals, Bitcoin, and the US dollar. And if you find this video informative and useful, be sure to give it a thumbs up and help me promote and share this video. Thank you for watching, and stay safe.